Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, July 18th, 2011 is brought to you by Realtic. All right, let's get into the markets today. Another down day on Wall Street, folks. Dow Jones Industrial Average dropping by 158 points, NASDAQ down 40, S&P 500 down 17 points on the day. Now, the bottom line is this, folks. Basically, what happened, you had a little bit of an up day on Friday, partially Options X related, partially European stress test related. And that's why, again, we rallied towards the end of the day on optimism over Europe and in regards to the debt ceiling here in the United States. But bottom line is, the closer you look at that whole stress test in Europe, the one thing that stands out is that they did not factor in a possible default in Greece. Well, that means that whole test can be thrown out the window because the whole idea of a stress test, remember, folks, is the fact that it factors in the worst case scenario. So in worst case, what do these banks need to raise? They didn't do a worst case. So it's a basic nonsense, annoying test that means absolutely nothing in Europe. And the market realized that over the weekend, and ultimately you're seeing the results today. And that is why the euro is getting pounded. If we look at the FXE, take a look at the FXE today. This is where it closed on Friday. This is where it's trading today. That's the ETF for the euro. The UUP is having a monster up day, although off the highs. Take a look at that move again from where it closed on Friday to where it is currently stationed. All right, so that's number one. The other part of the piece of the puzzle is obviously this whole debt ceiling nonsense with the government, but frankly, it's more so to do with the European situation. I know a lot of people here in the U.S. think it's debt ceiling related. It's actually not. It's very small because ultimately they know that the government will, regardless, raise the debt ceiling. They're not going to let it go into default. We all know that that would be catastrophic. So does the government, and they're not going to let that happen. Politically, it would be suicide for both parties to let that happen. It's not going to happen. So really, it's all about Europe. Now, let's take a look at the trading side of things today. It has been a great trading day. On the scalp side of the spiders, there were trades left and right. First scalp of the day I gave out right here, folks. Right here. See this little pivot low? I gave this out on the first candle. We made a good 30, 25 cents on this bounce right here. First candle down into that little pivot right there. You grab it for the long side and make some good money. Then we came down to this next line, piercing the green line right here, which happens to be a pivot low right from here. The call went out at 130.65 to go long on the SPY. The SPY bounced back to 131, basically 35, 40-cent bounce there. Then we came down to the orange line. Orange line getting pierced, going down to the blue. You get a bounce back. We nailed that one on the long side as well. So the scalps on the spiders were plentiful today for big money. In addition, small caps. There were great small cap trades. ABAT was one of them. I gave out ABAT at 112 today. $1.12. It runs all the way to $1.22. Basically 10% gain on that little small cap today for people in the chat room. It's been, again, as I said, a great trading day. You can take a free trial by going to the research center at InTheMoneyStocks.com, clicking on the free trial banner, or take the free trial of the chat room. One or the other, you can be making money today with InTheMoneyStocks.com. All right, let's take a look at a couple other plays, guys. Obviously, some shorts today paying off. The SDS, which I still hold, which is short the market, is having a big day today. Take a look at this, guys. Up about 50 cents on the SDS, which is 2 times short the S&P 500. I sold half my position on that for a profit today. I'm still holding half my position, seeing if this market does continue to collapse. Next up, let's take a look at a couple other things. What's oil doing today? The USO. USO is getting hit today, which makes sense. Dollar's higher, which is obviously going to push down all commodities in general, except maybe gold and silver a little bit, because those are safety plays. But obviously, oil getting hammered today on the back of a higher dollar. In addition, the way things are looking, it looks like the future economy will be slower than expected. Thus, as we all know, that generally means that oil demand will be lower. Therefore, price must go down to meet expected demand in the future months. All right. In addition, if we go to gold, gold having a decent day, up 90 cents, although it is off the highs of the day. Again, even though the dollar's higher, remember, gold is also a safety net. When things don't look good in the economy, when things look bad in terms of printing tons of money, then ultimately people run to gold. Same thing with silver. Silver is partially to a safety asset as well as an industrial metal, and silver's having a very nice day, up 99 cents on the day. Now let's take a look at some key stocks out there. What's moving? What's strong today? What's weak? The one strong stock today, you have to say Apple earnings. Apple earnings coming out tomorrow after the bell. Optimism after Google earnings here. You're at all-time highs on Apple. Take a look at this double top. If I zoom out on the charts, look at this beautiful double top here. Piercing it today, clearing it today. Now, does this mean that Apple's going to go up on earnings? Apple may actually, it's going to be more of a wild card, I guess. The easy way to or the easy thing to say there would be in regards to earnings, because again, it's had such a big run off the lows from down here, which means a lot of the good earnings are factored in. But at the same time, you have to say to yourself, well, this is Apple. Apple always outperforms. So in my mind, you have to probably be 50-50. Normally, if a chart runs up like this into earnings, I'd be bearish on it, but it's a little too hard to be bearish on Apple the way it's performed in recent quarters and over the past multiple years. All right, let's take a look at some bearish charts out there. What's getting hammered today? The big drops, again, are coming in the financials. Financials, why? Well, because they have exposure to Europe. If European defaults, if Europe, is a mess, they're going to have exposure there. Take a look at Bank of America, guys. Traded as low as $9.53 today. It's below $10, trading right now at $9.68. This chart doesn't get much more ugly. I mean, you can't have a chart that's any more ugly than this. Look at this drop here and look at the bear flag. Beautiful in spirit of bear flag collapsing down. I may be tempted to be a buyer, but I think I'm going to wait till after earnings on Bank of America and see what they report before I take a stab here. But I do think it's getting on the cheap side. Most likely it probably will get a reflex short covering bounce on earnings. Again, the basis of that is the fact that it's oversold to the downside. Even if earnings aren't good, most likely the stock price has already factored that in at this point. Okay, Wells Fargo's taking a hit today as well, although it's not back down to its double bottom lows. Goldman Sachs is taking a hit, but only down $1, making a new 52-week low today, but bouncing back above, which is actually a nice bounce. And JP Morgan is down 40 cents on the day. All right, let's take a look at a couple other stocks out there. Aside from Apple Computer, most technology stocks are lower, but not that drastically lower. Google's down 270 after that big run on earnings on Friday. Scanning through, Baidu's down $1.43, not a big move there. Amazon's down 286, only 1.3% there. Intel's barely down. Microsoft's having a decent fall, down 1.5%, and Dell is down about 1.5% as well. Cisco down 1.75. So a mixed bag on technology. Again, most things lower across the board except for Apple Computer, which again seems to be the standout today just before earnings come out. I believe that's tomorrow after the bell. Now, having said that, we need to take a look at a couple other plays. What's out there? What's moving? What do we like out there? Let's take a look right now. Going to some charts. If we punch in ExxonMobil, let's take a look at ExxonMobil's chart. ExxonMobil right now, you can see the big bounce off the lows. It hasn't really had that much of a pullback, considering the markets have come back in substantially. Exxon's holding up. I also like this little bit of a cross coming up above the 20 moving average. Above the 50. See how the 20 in yellow is going to be crossing the 50? If this Exxon could pull back just a little bit more, I actually start to like this chart. But what I need to see is Exxon pull back and then this cross above have a golden cross on it. And then you should see Exxon start to head up. So I'd look for 8150-ish area. If you get down there on Exxon, I do think the chart is going to start turning to the bullish side, but only if you get down to that level. Taking a look at Chevron. Let's take a look at that one. You can see the golden cross already. This stock has held up very, very well. I'm not a huge fan of this right now because you have a little bit of a sideways inside consolidation inside this initial move. If it takes out this pivot high up here, then I start to like it again. But as long as it stays below, I'm not a huge fan there of this chart right now. Let's take a look at some small caps now. Going to some small caps, I think you want to continue to follow Chinese small caps. My favorite today, which is slowly inching up, is BSPM. I love how this is now above the 50 moving average and it's consolidating. Great consolidation right here. Eventually, I think this is going to pop and take out this pivot high, and then ultimately, once you take out that pivot high at 142, you have a good chance of running all the way up to about 150 and then ultimately to 190. A lot of upside potential in some of these smaller Chinese plays, which have been beaten down recently. Obviously, if you look back at charts, I mean, look at these things down on their lows. Watch that one very closely. Also, ZSTN is one of my favorites here. Low end of the chart, down from $7.50. Remember, these are only trades, short-term trades, but I like this one as well. What else do we see out there? Well, there's some obvious plays out there that I'm giving the Research Center, and this is the key, guys. If you want to make money, if you want to join the pros and actually start having a chance in this market, making money on the long side, on the short side, knowing when to be in the market, when to be back in cash, that's why you take the Research Center or the Intraday Stock Chat. Research Center is more for swing traders and investors. We offer a 7-day free trial. All right, the 7-day free trial, many people come to us. In fact, I got emails over the weekend saying how last week was so good. They literally paid for a year plus of all our services plus the webinar. The webinar is $700, folks. So they paid for that and over a year of our chat room, which is $200, and the Research Center, which is $50 a month. And again, that's in 1 week of taking the free trial. That's a person for life that will be with us for life. And we're pretty sure that anyone who does the free trial is going to make money anyways. Let the service pay for itself. Take it free for a week and let it pay for itself the rest of your life. Bottom line, if you want to make money with the pros, if you want to learn the insides of the markets, proprietary techniques, and get swing trades live, then take the Research Center, take the chat room free trial, folks. We'll see you soon. Take care.